This is going to be the first globally synchronized fiat-based and debt failure. So the scale of this will be economic history for centuries to come.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for August 19th through August 26th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend, the market sniper, Francis Hunt. Francis, thank you so much for joining us today.
Delighted to be with you again, Elijah.
Well, it's great to have you today. I did want to discuss the record-setting gold prices we've seen above $2,500 an ounce. So quite expensive, I guess the mainstream might think, but you've mentioned how people are still wildly underallocated in the gold space. Can you expand on that? And where do you think we are in this gold bull market?
Yes, actually, I've used a couple of analogies before, Elijah, to answer the second part of your question first. Where do I think we are? I think we've got probably the fastest sprinter of our generation in Usain Bolt, running, literally strolling alongside. We're driving alongside him as coach and mentor to him in the vehicle, and he is literally just striding and loosening up at the moment in terms of my analogy of where he's going. So gold at 2.5 is he's got out of bed and he's got his running shoes on and he's loping alongside the vehicle, and we're preparing for a training session. That's how I think about the 2,500 run. So to be clear, we're closer to 3,000 than we are to the original support at 2,000 that was previously resistance. So we've been appearing for quite an extended period on your show. And we've said, this is going to be a continuation pattern way back that since 21's highs. You're going to first break the 2K, then you're going to be support on the 2K, and then you're going to set new up legs, which is going to take you halfway, we expect, to the 3,000 level. These are all things we've said, and we get plenty wrong, by the way, but in terms of the cycle, this is largely playing out exactly as said in terms of gold. We've not been near as accurate on silver. That it's an extension almost of the cycle, and we can address that later. But in terms of the gold half of things, this is doing exactly what it should be doing. And as I've highlighted before, we did a super targets for gold. The 3K is just the beginning of this major move run. When we do that, we'll have a pullback, we'll have a churn. It'll be psychological. The central banks will fret for a while. There'll be a tendency to pull it back from there for a bit. It'll be getting too many headlines, and then we go again. And then we've spoken about 6,800 through 7.5, and right the way. And there's people that have thrown bigger numbers out than me. And they will possibly in due course be right, but we have a technical target for everything we mentioned. So we don't just play who can throw the biggest number, 20K, 25K, given enough time. All these things could turn out right, but we like to have a technical chart that actually is given them. So at that point, we're at 7.5 and beyond. So really the sprint is yet to begun. Usain with those long legs hasn't even begun kicking his heels back and really stretching those legs and breathing and trying to knock the world record out the park. He is loping. He hasn't even gone into a canter. So the cycle is early. Why do I say that? Because the scale of the collapse is so vast that we're really only in the early stages, and it's a lot longer cycle and process than you think. It's not just 40 years of bond, supremacy and climbing in value that has turned since 2020. It's an entire financial system, and it is more globalized, and everybody is a leper in the leper colony for the first time ever, unlike the Great Depression, which was largely a US stroke to a degree European event, with the rest of the commercial world very much in its own vibe. This is going to be the first globally synchronized fiat-based and debt failure. So the scale of this will be economic history for centuries to come. And that's why I say we're truly just beginning. So it's a fabulous place to be for precious metal stackers in terms of upside. The journey path socially and geopolitically, it's a little bit more harder to be use such optimistic phrases for.
Yeah, I mean, it's a scary world out there, but we can only play the cards that we're dealt, right? And when it comes to, I guess, what is happening in the financial system, if you could expand on that, because we did see that shock in the markets based on what was happening with the yen and also unemployment here in the US. But you've mentioned that this issue is really just the tremor before the earthquake. We still have to see the yield curve uninvert, and when it does, that typically sparks an economic downturn. So can you detail a bit more of what you see happening in the economy in the months to come?
Yes, indeed. A lot of people have suddenly woken up to the significance of the USD JPY. We've regularly, for the last 2 decades, referred to it as the fear trade, because when it does eventually start to unwind, it unwinds quite brutally. And the question we have to ask is that unwind complete? You'll have people, mood music people saying, yes, 75% of the carry trade. How do they get those numbers? I don't believe it. It's a bit like Bloomberg reporting that China stopped buying gold. These are sort of pacifier statements of the mainstream media that they use to misdirect you. We can't tell if major derivatives that have also got a cheap financing utilizing the yen aspect to it. We were discussing that with Bill Holt as well recently. There could be an iceberg below the water level of exposure in there. And it's amazing how the VIX got absolutely smashed right back down to normal, which looked ridiculous and points to some degree of calm down, everything must be put just straight. Make quiet on the surface. Don't let the storm that rages beneath be too prevalent. So we looked at that. If you have a look at that VIX spike, by the way, the high of that VIX spike went well beyond most previous events. It was only surpassed by subprime and by the CV19 event. So if I just bring that VIX chart up for you as well. So there's a lot of things that I feel we're not getting the full story behind the screen here. I'm just going to change the time frame so that you can see that VIX spike. It got brought back super fast, and that's abnormal. Volatility usually explodes quickly into the scene and takes a while to dissipate. So just bringing you in on the VIX indicator, there you can see 08, a super high there, and there you can see CV19 over there. Let me just circle those for everybody so it's clear. Those two spikes. Literally, this event has surpassed all others but for those two, and has been put back in its box, right back down to very close to what is record low VIX rates. Now, that points to a degree of manipulation. People don't freak out that much and then go, oh, okay, I'm calm again. I'm done. That's it. Took a breath. That's all it took. So I'm suspicious inherently that this whole saga has played out to its fullest. And then you mentioned the question regarding yield curve inversions and reversions. And again, we had a shock break above that reverted the 10s minus the 2s on yield curve reversion, which for everybody is a debt, something that we monitor in the debt space. And we are waiting for what is this going to be. And you can see the peak of that. I'm still on the monthly time frame, so I'll drop it down for you a little bit. We reverted positive for a short bit, and it was immediately turned back down. So I don't know. Maybe they're not ready yet for whatever they're baking into the wood for us. But there is another macro event in my overall assessment of some scale, because the real drama happens when this line goes through the blue line and stays above it. It can have a pullback, of course, but continues to trend up. That's when you get the crises-based narrative. And if I go back to the big time frames, just to show you how this has been. So there has never been a yield curve inversion which hasn't had a subsequent recession or depression or major macro geopolitical event that led to recession or depression in the modern era. So you've had many recessions that didn't get yield curve inversions, but if you get a yield curve inversion, you're absolutely, it's 100% indicator. And the other thing that's so much more relevant about this indicator is, unlike the Fed that watches labor statistics, which is a major lagging indicator, which is why they're always late to cut. There's more reasons why they want to be late to cut, and we can touch on those in a minute. But this is a leading indicator. It tells you in advance that you're going to be hitting troubled waters. You can see 89s here for the early 90s slump, which had the Asian crises over there. You can see you actually dipped in 97 before the dot-com crisis. You can see in 2006, you first went under and you reverted twice. But eventually the final one here in the early part of 2007, at this point over here, only for the Lehman crash to occur 08. You can see here with CB19, we had the repo markets problems here in 19. One event actually just went up below the zero before January 2019, and we dipped under again on the middle of 19 as we were heading to the late H2. So August for September and October, where there was repo-based issues. And then we went bang, CV19. Now this has been the longest reversion, or my apologies, inversion, that is below the zero, that has yet to revert. And we touched on the tremor of the yen, but it wasn't enough to take us back, telling me we're getting close to the point where we revert above zero, and that the big crisis and the main enchilada is still to come. So I can't say for absolute certainty anything when we're talking about the future, but my overall on balance of probabilities-based assessment is we're yet to have a major macro event. Now, that could be mpox or something else. War, there's so many down risks that are on tenterhooks that could fall, that could be major scale events, banks, etc. The debt, it could be financial, it could be a second stage in the yen unwind, starting to involve derivatives. We're seeing the dollar lose back against the yen again, which is again still part of the fear that tells me the narrative that everything is done with the carry trade is quite potentially not true. If that was the case, we should be reverting back up strongly. And in actual fact, this is what we're getting on the USD JPY. Let's just take it on a lower time frame. You can see that sell-off over there. And just as an interesting speculative point on the USD JPY, we've drawn something else here for you that's kind of interesting. This is a neckline that we've thrown down on the 142 level. You've got a potential left shoulder there. You've got a long, slow grinding head with a very violent sell-off there. You've got a weak rally here, and we're actually looking down again. We could bounce a second or a third time around here. But if we throw down again on the yen carry trade, you can forget about all notions that 75% has been unwound. That's misinformation, misdirection. From the usual mainstream media sources, you could be in a head and shoulder structure for a lot deeper. That points to a real weakness in dollar. And that's what they might need to keep the debt valuations up. In other words, where we were different, Japan was the one that was keeping their debt market up largely with not many changes in interest rates and taking all the hits on the currency. It's now the dollar's chance it could be, because the Japanese have now raised rates. That's the devaluation of debt. Remember that. So it's never, that's what my criticism of people that are, dollar milkshake supremacists, your currency going up is not everything is awesome if it's on account of interest rates going up and your debt losing value at the fastest rate compared to everyone else, because people stop buying your debt if the capital gains is going to revert so chronically negative. So in this sense, we might be getting a sustained period of dollar weakness. We'll see what happens here, but the yen, the USD JPY is a fear indicator for the carry trade. And after a small bounce, we are in fact heading down again. And that 142 is a key watch level because it's where we bounced in the extreme volatility. Do we bounce again? Will we rally away from it? And maybe a double bottom and start going back up? Or do we form a continuation pattern, which is a time bomb for second wave? And I would probably say there's a chance we're in that latter category. So let me hand back to you then.
It seems like very, I guess, exciting times ahead, especially with the yen carry trade situation there. I did want to then maybe get back to gold here, the impact it may have on gold and all these economic issues, and what the chart looks like as we have hit new all-time highs above 2,500.
Yes, I'm going to answer your question on gold. I'm going to be tiny bit cheeky, and I'm going to throw in another commodity just to cross-reference gold, so that everybody can have a little bit of a compass, because understanding relative valuation is super important. We call it the 360-degree analysis that you want. Then I'll give you the pure gold versus the dollar side. But I want to highlight that this just further adds to, given your question, it further adds to the concept that we are in a state of great weakness. And that people that think that the labor economy was saving us from being in a recession, when they redefined what a recession, should think again. We've had a lengthy period on oil. So I will be answering your question on gold, but I'll be first highlighting this. We've had a lengthy period on oil, and we do have a bit of a reputation for being the oil short callers. We've had two major calls, one just before the CV19 and one in July 2014 on macro timeframes, both of which turned to absolute bloodbaths in oil. And I contrast oil because I have a lot of friends that are in the energies-based commodities because of the commodity super cycle. And I keep going, it's a debt-based fiat crisis, debt and fiat. This is a monetary metal bull market. It is also suppression of retail, consumer, and everything else. It is not a wealth enhancement liquidity event yet for that part of the market. That is destroying purchasing online, deliveries, general activity, and that we've seen copper crash, which was in our Substack as a leading indicator. We've seen lumber for US house buildings come down brutally, and now I'm showing you oil. And I actually, when the yen trade unravel began, I said that if you want a delta neutral trade, gold long, oil short. It's that time again. And that was our CV19 trade, by the way, as well, which was actually even stronger than just oil short because you made upside on the gold. There was a small dip for CV19, but you went on to make the 21 high, and you actually saw oil hit zero in the cash markets and go negative in the futures markets on account of storage. So this analysis is happening again. And it's very much related to, and if God forbid we were to get climate-based, mpox-based, or anything that restricts activity, flying, or anything else again, are we seeing the markets are a future forward-based thing? And I was listening to other people talking about backwardization in oil, in that 2025 oil and 2026 oil is actually cheaper. What do the markets know right now? That cash oil is selling off. Futures oil delivery is actually lower than current. What do they know? It's almost like a yield curve inversion for demand in a highly consumer significant commodity that is deeply part of the inflation number. And the one thing they need is to kill that inflation number so badly that they can justify quantitative easing again. Again, this points to another demand destroying event for this. And we actually on the oil market have both an inverted HVF downside target, but if the larger head and shoulder plays out, you could be in at 32. So let's go back to your original question. How's it looking technical on gold? Well, relative to oil, I think gold is going to be doing far, far better. But if we have a supremely significant demand-destroying event, it will still have a moment where it can sell off. But if you have, as the trade, and I'm a trader, investor, and long-term holder of gold, so this is more for those that like a little bit of speculation, you can protect yourself against the downside of gold by being short oil. Because my take is whatever gold dips to the downside, oil's going to have a multiple beta to that. So there's a little bit of an insurance in that trade by being delta neutral to the commodity class. But broadly speaking, we've broken up out of a rising wedge, which is often characterized as a bearish setup. And it isn't. You can go to the high side. This was another example of a potentially bearish setup. And as you can see, you had a melt-up event out of that. You made marginally higher highs here, but you couldn't hold them. And this was essentially a continuation pattern over here from the 2000 call that we gave on your channel some time ago now. It would have been March of this year, I think, that we were sitting on 2000, that we had the lovely squeeze. So you're seeing almost a bigger version of this occurring here. We've gone up, okay, little bit of news headlines, we've gone back down. This is a hammer, so we tested down, we've come back up on the short time frames. Gold is looking healthy to me, and if this macro turns out to be anything like this guy, you could be looking at quite an impulsive move to the upside by scale. And don't forget, our next stop targeting is 293,000. And you're no longer, you're closer to those levels now than you are to the original 2K balance, as we're trading at 2,510 at the moment as we're speaking. So I think it looks really good for gold, and I'm happy to be long without the oil short. I just find the oil short actually has a potential to take a little bit of edge off in case we get real drama where there's a rush for liquidity because people are forced sellers. And also an opportunity to make some extra alpha on the downside on what looks like a very weak oil price. So I've hopefully answered your question and added a few other wild cards in there.
Definitely. And it obviously, when we do see demand destroying events, this seems to hurt silver more than gold. What is your outlook for silver? And if we do see this event, do you see that silver could be hit quite a bit?
Yes, and it's a great question. And I want to come back to where we had a view on the gold-silver ratio. We'll finish on the gold-silver ratio. But broadly, I will argue for now, until such an event occurs, you are just in a very similar, almost to Bitcoin, broadening structure, which is typically continuation upside. So that's your bull pole, and that's a megaphone. So if you just look at the pink lines that I've drawn there, to not overwhelm people that are not typically technical, I'll just turn the rest off. You've had a bullish move, that's your pole, that's your descending megaphone. Overall, it's led to around a 50% retrace, I would guess, from the lows to the highs. And now you're actually moving, I would imagine, to the upside of that capping descending grind line, which is the top side of the megaphone again, until that demand-destroying event occurs, or if it occurs, we will see. And it's difficult to put timings on it. When will the yield curve revert is the answer to your question. And until then, as long as copper stays low and is selling off, lumber staying low, there is an industrial component to silver, but silver does also have the monetary component to it and has recovered fairly well. But the gold-silver ratio is still high, and we want to see this rollover. And you may recall, and I would say our initial hunch of what might be going on there has extended a little bit, and that it's not going to come as soon as we'd like. So again, what does that tell me? You may recall we felt the break of this level was very significant here. It was, but it didn't continue. It based and it returned quite violently up here with the yen carry trade unwind, which has the industrial elements. So I think the fear of demand for it in cars, whatever the case may be, other jewelry, etc., was sufficient to hurt silver more than gold, and that brought it back into this zone. But we did meet the high point here again, so we've got again a sort of a falling wedge structure, I would say. I'm going to take you up to the monthly. That's kind of a slightly bigger view. We really want to flip from our gold back into silver when we run and we start getting to the red line here, Elijah, which is 65. That's the break we want to see. This is a shooting star. So silver, now that it started going up, is reining back gold to a degree. So I would expect to see it work its way down in here. But once it gets to the low end, if it gets supported back again, we can go back up. So we're still in a holding continuation. This has been really frustrating for the silver bulls, because since that moment here and that sell-off, you've actually been in a range that has been tightening and continues to tighten. And the longer you're in that, and as impatient as it makes people, the better the move in the end. You know, you've kind of been in the 75 to 92 range, but it is tightening and it's turning down a little sooner. How much lower? Will we probe a little bit lower? The release of the 65 will be significant. But the one concern I do have for that is if we get a demand destroying event, let's say for now we come back to the other side, but we then have a major crisis, a lockdown, climate, pox, banking failure, second stage yen unwind, you could go rushing back up to the other side there. And we don't want to see it break out of that structure to the upside, because that would point to a lot longer extension. And so my overall tiny tweak, if I may, is keep buying the gold ounces. Just get stacked and loaded with gold. Then we can start pivoting. I already have a silver allocation. We can start rotating into silver once we have clear evidence that we are going to the downside and getting ready for the 65 break. Because at that point, that's when I think things will capitulate materially significantly in our favor. And the fact that this is being pushed out tells me that this is a far bigger event. We've moved, you think stage one is over and you're already wanting to go, everybody is second guessing stage 2 and 3. You're still in stage 1. This is just the beginning. And that's why I refer you back to the Usain Bolt analogy. He's literally warming up. He's walking next to the car, stretching his quads and moving his arms around. He's not even begun to load. And we've got to stay with gold, and then rotate when we have clear. People will say, look, you're going to get a bit of a higher beta now for silver, but we want to see it break. I don't want to trade the swings inside of this so much. Okay, if you want to load up on silver, you probably do a little bit better over the next few weeks or maybe a month or two. But it's what's going to happen in 6 months. It depends on your timeline. If you're a day trader, buy silver now on the shooting star, not gold. If you're investing for holding, for seeing through the full reset period, again, there's a chance we break this to the high side, and you will have a clear signal for pivoting into silver. Keep stacking the gold. That's how I would put it, because it's the monetary failure, and gold has the highest percentage of money, replacement money.
I think that's a good maybe ending point, is that it's a monetary failure, as you mentioned. Really, it's important to look at the big picture as well, like what stage of the cycle we're in and where are we headed going in the future. And so important to have insurance against that, right? So you have physical precious metals that are outside of the system, so that whatever we see in the future, you have something of real wealth to kind of guide you through that transition. Before we let you go, if people are interested in learning more, can you share with our viewers where they can find you and any last thoughts you had?
Yes, sure. Themarketsniper.com is our website. It's also the YouTube channel. We do cover crypto as well, so it's The Crypto Sniper. We're on X as well under the exact same taglines. That's where you find us. My parting thought would always be, this is going to be, as I say, seminal history. I sound it won't be the first time I've said this, of hundreds of years case study history. The most important for everyone to do is to enjoy their life every single day, do something practical and useful towards preparing for something you wouldn't expect. And that could be very, very different to anything you've had in your existing years. And that is systemic failure. Government as a attack vector, I feel as a mention on a news item, and not to extend too long here, but you've had Kamala Harris approve a Biden policy of 25% tax on unrealized gains, as well as a 40+% tax on other realized capital gains. And we are going into weird territory here. So unrealized gains is actually the key part, is in the first two letters, unrealized. That is not yet made. So they're going to start taxing you on assets in advance of potential profits that actually may not be achieved. And you can never get a refund on all that. You can get a tax credit in that asset category alone. And I just want to highlight a small example that people really need to know. And this is demonstrative of a state that knows it's running out of money and is an attack vector on any little pockets of wealth that exist. That also is bringing in a tokenization system, which are derivative proxies over your assets for when you are a forced seller and no longer able to pay because it's been deemed your property's gone up too much and you have to now pay a tax amount on that gain that is actually not being realized because you haven't sold it, making you a forced seller to actually achieve that. Or to get your credit for the fact that the state assessed it as too valuable. This is an absolute voodoo chamber, the concept of unrealized gains, and you should see it for exactly what it is. It is desperation and it is aggressive theft. And it is putting you on the wrong side of a compound interest equation. Recognize this. You may need to, and I'm unpopular for saying countries that are considering doing that should be left. And it goes for a large part of the West. If you choose to stay, I understand home's a very difficult place to leave, but this is very, very serious. You're going to have to get dark on your assets. Otherwise, you're going to get drowned and impoverished, and you will be leveled, and they will write up the tax laws. It will be written up, legalized thievery. You know, you're in those perverse times. So this is a very serious video that you'll be releasing to your audience. Everything we are predicting and many of the slightly dark things we have said are continuing to come. Unrealized gains is a voodoo chamber of absolute Robin Hoodery. And everybody should be recognizing that you need to take action. And we specialize during reset in not only building of wealth, because there will be huge opportunities with this huge destruction. Because energy and water, they don't disappear. They become steam, they get recondensed somewhere else. Energy becomes heat, it gets collected somewhere else. You don't kill it. Something else will be inflated. But if you're in the wrong place with the wrong structures, which could be an accident of birth once in a millennium type economic event, you will be destroyed. Our focus as a community is ensuring you hold on to your full balance sheet and grow it during these reset times, and you do not fall victim to this totalitarian Bolshevik communistic strategy that is being rolled out on you. It's not by accident, it's by design. And that's our core focus, and I'm messianic about it. This is the story of my life, and I want to pull as many people into lifeboats as I can, and that will be my contribution as Francis Hunt. If you want to be part of that and become part of our army, please feel free to join. Gold plays a huge part of that. Thank you, Elijah, for giving me a chance to elaborate.
Well, thank you so much for that. Francis, we'll put a link in the description of this video to your YouTube channel where people can find more about that. But I think it's a bit of a frightful message there, but it's also, as we've mentioned before, important just to play the cards that were dealt and prepare accordingly, right? So thank you so much, Francis, for your time. And you have a good day, and God bless.
Same to you, Elijah. And it's going to be a beautiful world. We just got to be in the right place and play it smart. That's all.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for August 19th through August 26th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
One topic relating to gold I wanted to discuss is on COMEX bars now, it sounds like, and these industry bars, that they're actually dating them. And you think there might be some significance to that. What is your perspective?
Yes, I saw the article for both NYMEX and COMEX that came out this August. In fact, this is really current. And I'll send you the link if you like, that says from next year, 2025 will be printed on the gold bars and the month as well. So year and month of minting of any bars will commence from next year. And for me, there's never a change without a reason. And I'm finding myself speculating on what could be the motives behind that. One possible motive, and this is me being, suspicious and treating government as the attack vector that I believe them to be, is that speculators will be new entrants to gold. And as a result, will be subject to maybe being handled differently. Now, some might say, well, they'll just melt the bars down. That potentially becomes a problem where if you have serial numbers or other things, though. In other words, that could be deemed black gold and illegitimately acquired in Africa through subsistence mining, a bit like the blood diamonds element. So it's not necessarily a perfect solution. And I would suggest to people that if they intend to make meaningful gold purchases, particularly of scale, because this affects coins typically have dates in most instances anyway, with unnumerated by date, that they should do so during the course of this year before this becomes the new rule. This is very specifically the Western exchanges, NYMEX and COMEX. It's both because it includes palladium, platinum, and silver as well. So large chunks of precious metal, large packages of bars will now be dated. And there's a reason in that, and that could be future legislature which could come through. And I don't think it ever serves you. So it's normally a constraining factor. So it would be great to over allocate potential future years spending into gold now. If you want a reason why, that would be a take I would give as potential. Do I know that? Of course I'm not. I'm absolutely speculating as to why the sudden need for dates on bars.